All right, so continuing on with customers, here's a few features that you can do in QuickBooks where you are able to create batch invoices. Okay, now the primary goal of batch invoices, or the purpose of it, is actually to be able to mass produce invoices. However, they have to be for the same exact item. Okay, so again, if you're invoicing, so this is more so if a person is subscribed to you, okay, or if there's like some kind of membership dues or some kind of newsletters that they have to sign up for, that is something that you can charge or issue an invoice for your customers who are in that small pool of circle, okay? Because not everybody's going to want a newsletter. Not everybody wants to be a member. But again, for those who do want to, right? Again, when you have those kind of memberships, right? Maybe you offer exclusive discounts or exclusive deals, right? Maybe you have them set up for an email list, right? For whatever reasons that you have like some kind of group, you can create batch invoices for them. So how do we do that? Let's go ahead and dive right into this section right here. So first, what we're going to do is we're going to go ahead and close out all my windows real quick. And I'm going to go to my customers. So this is the only place that you're able to find batch invoices, okay? It's going to customers window, and you're going to go ahead and create batch invoices. Okay? Only one way and one way only. You can't do this at the customer center because obviously the customer center has a list of each and every single customer. In this case, you want to do all of them. You're going to do it here on the menu bar. Okay? Click on that batch invoice. You're going to get this error message, and you're going to go ahead and say okay. Right? Ignore it. So then this window pops up, and this is what you're going to be doing first. So in order for you to be able to mass produce or create a bunch of invoices at one time, is you do need to actually create a group or to be able to pool the people that are involved in that group to be able to issue those invoices. So once again, I'm going to create a billing group. Now in this case, I don't have one made, so what I'm going to do is I'm going to create one right now by adding a name. Now in this case, this group can be consisting of anybody that you want. Now again, for this particular example, this is they pay, I believe, a $20 dues, $25 dues for special services or special discounts, special exclusive deals and things. And we call this a photo club. Okay. Now again, of course, if you want to make something unique to your company, of course, if you have like tiers, like maybe some people get even more special discounts if they sign up for a specific criteria. Maybe every package that you do create, you can create different numbers or different packages for each and every single tier. So a great example could be like, okay, we're a photo company, right? Maybe you have one for full access, which allows you to have free consultations, or they allow you to have a free photo shoot. And then the next package could be backstage pass, right, where they can get deals and discounts. And then the next one could be red carpet or VIP, right? They could have that status, and they can get exclusive deals, free photo shoots, free promo gear, whatever it is that you want to include in your packages. Okay, again, in this case, we're just going to make it the photo club, as it says in the book. Okay. And I'm going to go ahead and click save. So now that I have this list, I can go ahead and select the people I want to add to this list. So I believe Mr. Ron Berry is going to be our very first person that's going to be on this list. Okay. We also have Mr. Tim Fang. Okay. He's also going to be on our list. Okay. And let's say Bob Mason is going to be on our list too. Okay. 3 people. And I can go ahead and save this group. Okay. And then I can go ahead and proceed to the next step. Okay. So this is my group, this is my photo club, and I can proceed to the next step. So the next step is going to be tailoring the items that you're charging these individuals. So in this case, I've already set up an item called dues. Okay. So that's exactly what I'm going to do. I'm going to be charging them dues. So again, the date, I believe, let's see what the date says actually. I think it's for January. Date, February 20th. Okay, awesome. So February 20th, okay, they get issued this bill, okay, and again, it's dues, okay, and you want to use the Imagine Photography Service template, okay. Item is going to be dues, okay. And once I hit dues, again, because I've already created this is one, right? You only have one access to one membership. You can't have dual access, right? Just because that would defeat the purpose, right? If you want dual access, I mean, it's just based on the tier that you create. So there you go. One photo club membership dues for $25, okay? In the amount of $25. Once again, I don't believe it's taxable. And again, class, we don't know where, or in this case, we don't need to set up these particular individuals with them. You can modify each and every single invoice once you create them. You can always go back and modify them and then send them out. So if they belong to a particular store location, just like, for example, Ron Berry, he might be from Walnut Creek, while Bob Mason's from San Jose, right? You can make these changes later on, okay? So once everything looks good, of course, you want to also make sure that you say, thank you for your business, or thank you for joining my club, you know, or give them a quick description of, or a reminder of what they have access to, or what this membership due includes. So you can always say thank you, you know, thank you for joining the club, whatever you want to put. In this case, I'm just going to put the standard thank you for your business. Okay. And then I click next. So here it shows you that you are going to be creating 3 invoices. Now, once again, you can always modify. So example, like why does it that Bob Mason gets a term with a discount? You shouldn't do that. You should make them all look the same. So in this case, you would have to change that, but in this case, it won't allow you to change anything here just yet, because what this ultimately is doing is it's just creating a generic invoice that's going to apply to all the people. So once you create that invoice, you have to actually go back into those individual people to go ahead and be able to modify that. So again, you would need to modify that he should have 30 days to pay for the membership dues, okay? Or if you want to, right, membership dues should be paid every month, right? So yeah, you can make it date driven, say maybe the 1st of every month. So whatever terms that you want to choose, you can make it exclusive for these individuals, okay? But again, they all look the same. And again, we're going to start out with invoice, start out with the invoice number, okay?
Question.
I'm sorry?
I have a question.
Yes.
So you said all of them on the terms should be the same. So if you go after you create this group, you have to go back to Mason and change the term, and that will be a change to his following invoices also,
Correct.
right?
Well, no,
Okay.
no, it will. It will. Yeah, you have to change it one at a time.
Okay, but it will not be just for this group. So going forward, he's
Hmm.
gonna have different terms.
Right. Yes. When you
Okay.
process this, yes. So you have to go back and fix it so it's not. So it's fair.
Okay.
Hmm.
Thank you.
Because these are set ones that we set up when we set up the customer's profile. That's just the default setting. So in this case, I have to manually change it in order to make it fair for everybody because it's not fair that why does he get 2% off of a membership due while everybody else doesn't. So yeah.
Okay.
Hmm.
Thank you.
So once you have everything, make sure you select them because if you unselect them, then it will not create a membership due for them. So or an invoice for them. So make sure you select them. Okay, and I'm gonna go ahead and click create invoices. All right. So there you go. Now again, it tells you here that you've created 0 marked to be printed, and 0 are going to be emailed because you haven't printed them yet. And in this case, we can't print them yet because we need to make some changes. So 3 of them are unmarked, which you can send these later, is which what we need to do because we need to make some changes. If you want the terms to be date driven, we have to fix them, right? Saying, okay, well, it's due every 10th of the month. So if you want to keep your membership status, right, you need to pay by the 10th of every month. Okay? And then I can click close. So once again, if I go to Bob Mason's invoice, right? So let's go to Bob Mason, right? Let's go to his invoice right here. Okay, so all of them, we have to fix the numbers too, because that's not what I want. So you can make membership dues can have a specific number that you want to put on there. So it could be, in this case, I'm just going to do 2021-108 or 109 in this case. Again, it's going to be on the 20th. But what if I do want date driven term instead of this 2%? So, yes, you can modify it right here. And in this case, I don't have any date driven terms, but I'm going to make it even like everybody else is saying it's due in 30 days. Okay. And of course, I can modify it I can make changes. So I made the changes to the invoice number here to make it 109. Okay. And I'm going to click save and close. And it says, do you want to save these changes? Yes. Okay. Yes. All right. Boom. Now his invoice has changed and the terms has also changed as well. You may have to change the other two because again, you want to make the invoice numbers kind of similar to this one. Okay. So again, there's a lot of factors that you can do to make changes and things like that before you send it out. Now, if everything looks perfect at time of when you produce the batch invoices, then go ahead and click either, you have the choice, right? You can either email these individuals or you can print them and basically mail them out. Now, most common ones that most statements are, right? If they subscribe to you, right? Because we have online, right? If they subscribe to you to do a paperless statement, then you're going to email everything, right? Because that's what paperless statements does is they email the statements to you. So that's the same idea here, right? Or if they don't subscribe to you, then you need to make sure that you select that you're going to send them paper statements. Okay. And that's it. That's how you create batch invoices where it's when you have a group of individuals that require you to produce the same exact invoice. Instead of having to do it one at a time, you could save extra time and just create a generic invoice for that entire group. But yes, in this case, I have to make some modifications on each and every single one. But at the end of the day, it saves you that much more time because how much more effort is it for you to edit a piece of information than versus have to create a new invoice for every individual person, setting up their date, setting up their the invoice number, setting up the taxes, and writing the message over again. Thank you for your business, right? How much more difficult is that versus just editing information that you can easily do? Okay. So that's batch invoicing. Okay. So next thing I'm going to show you is going to be creating customer statements. So let me try to exit out of this real quick and go to the home page. All right, home page is right here. Okay. Once again, we talked about invoicing, batch invoicing. So the next section we have here is going to be creating statements. Okay. Now, statements is very, very similar to if you've ever had, for anybody who owns a credit card, right? They always issue a statement sometime in the month, on the exact month, right? And when you receive it, it gives you a list of all the transactions that you've done, and it gives you a due date, and it gives you like an envelope for you to make a payment, right? That's exactly what this is. This is how you can create those statements for your customers, right? Especially for those who are very active, okay? Who purchase all these things, and also you can also use this as a reminder saying, hey, you owe me money. Don't forget to pay me, okay? Now, in this case, if that is, right, what you want to do, you can go ahead and set a criteria for these statements, because again, every statement usually happens towards the end of a given period, right? Usually at the end of the month or at the end of like a quarter or whatever means that you want to give your customer statement. So in this case, we don't have individuals that get our programs every single month. So we do quarterly statements. So in this case, right, you can set dates so that you can have it like that. Now, if you're like a frequent, like a type of business that has a frequent customer that comes over and over and over and over again and uses your services all the time, then a monthly statement is perfect, right? So again, a credit card company or a credit card statement is usually a great example of what a customer statement does. Okay. So in this case, statement date, right? I'm going to say this statement date is going to be, I believe it's March 31st, okay? Or unless you want the statement period. So in this case, statement period is actually going to be from January 1st, okay, all the way to March 31st. Okay, so again, I'm doing quarterly statements instead of one statement. So the statement date on there is going to say that this is as of March 31st. And again, so the period that I want to measure what the activity of each customer was between January all the way to March. Okay, and this is where you actually have to kind of go through each section and actually tailor for what you want. So here are the lists that you can. You can actually select individuals if you'd like. Instead of that, you can also choose, well, I'm going to say I want to send a statement to all my customers. Okay, so then I don't have to go through my list to see who has an account balance and who doesn't, right? I want to send it to everybody. Okay. I can even choose if I have if I want to do multiple customers. Let's say I want to send it specifically to this individual. Okay, I can choose a group, or I can choose I can choose a list. Choose from a list. If I want to send one to just one customer, you're able to do that as well. But again, if you want to do, if you have a customer type, you can also do that too, or maybe based on their preference method. Okay. In this case, I want to do all my customers. Okay. And again, so that's all your customers. Now, the more important ones are going to be asking these questions over here, because you do need to fill this out, because again, when I go through these answers or questions, right, it will make sense of what you should do. Okay. So the first one's going to be selecting additional options. Okay. So a template, we're going to use the standard Intuit statement. Okay, so we've already have one already. Oh, in this case, this is Intuit's standard statement. So it's going to be very generic. If you have a custom one, then go ahead and add it in there. But in this case, we don't need one. Okay, this is if you want to make it pretty or not. Okay. Create one statement per customer. Yes, you don't want to be sending multiple statements to a specific customer. What if they don't care about the other individual? You shouldn't. It's private information. So you definitely want to make sure you make one per customer. Okay? Or in this case, or if it's like a copy, you can make two. You can make one for the customer and one for the job too. Okay. Again, you want to show invoice items details. So again, on a statement, right, you could just have the transaction number and that's it. In this case, I would like for them to understand what services and items in detail that they've purchased for me. Okay, that way your customer doesn't have to come up with you and be like, wait, I don't understand. What did I buy? Why is it costing me a total of $400? This way, it will save them from giving you a call saying, why are you billing me $400? Right? And oftentimes, customers, their number one job isn't to memorize what you give them. You're supposed to be in that position. So in this case, it's better to just to save yourself a phone call by exposing all the items and details on the actual statement. Okay. Then again, print statement by billing address zip code. Yes, normally, yes, you would. You'd be sending them to their actual billing address. Right? And then again, print due dates on the actual transactions. Yes, you definitely want due dates on there because that's the purpose of sending a statement. First off, you need to recognize when did you charge them. Second of all, you should have a due date on the statement, or else, right? They're gonna just be like, "What is this then?" Right? It's a statement. You're just telling me what I did, but what am I supposed to do with it? Am I supposed to pay for it? So that's usually something that you definitely want to add in there. Okay. Then the next section is going to be do not create statements. Okay, so this is the important thing that you do. No, you definitely so here with a zero balance. Yes, don't be bothering your customers. That has nothing to do with you, right? They paid off their account balance, so therefore you don't need to send them a statement every single time to let them know, hey, guess what? It's your friend from Imagine Photography. You owe us $0. That immediately is going to go into the trash, and that's a waste of paper. So please don't be bothering your customers if they don't have any account balances. Okay. Second thing is going to be with a balance less than. So yes, you can do a frame, but in this case, no, I'm going to do even if they owe me $1, I'm still going to send them one. Okay? With no account activity. Yes, please don't bother any of your customers if they haven't even talked to you in over a year. Okay? If they don't have nothing to do with you. Yes, you can send them promotional flyers to try to get them back to a customer back to doing your services. But don't send them a statement because that's just gonna waste paper. It's going to be in the trash can. Okay. And again, for inactive customers, please don't bother people who no longer want anything to do with you. Okay. So again, no account balances, no activity, and of course, if they're inactive, don't bother them. Simple. Okay. So now that I have that whole thing right there figured out, now I can choose to take a look at a preview. Okay, so here, I'm going to click preview, and it should open up this window that allows you to see, whoa, so this person did a lot of transactions with us, and then so we have a total of 1, 2, 3, 4, 5. We have a total of 5 people who did transactions, all right? Awesome. So with that being said, right, if you want to zoom in, you can zoom in on this particular person. I believe this one. Let's see. I think this is Miranda's Corner now. Let's see. Walnut Creek. Yep, no, this is Maria Cruz. Okay, so Maria Cruz is from Walnut Creek. And here you go. She did a lot of transactions here because she had a branch opening photo shoot. So again, here it lists out the date that you got the service, what items that they purchased, and what was the total amount, and whether the statement even includes whether they made a payment or not. So in this case, the amount that's due is a total of $801. Okay. Okay. So that is a lot of money. But that means, again, Maria, she's been paying here and there, but this is just their account activity. Okay? This isn't more so to show you, hey, you still owe me this money. This is account activity. So here it lists all the services that we provided, but it also lists that she made a payment. Okay? And here it also says that we issued her check back for $133. Okay? And so therefore, she only owes me a total of the $800. Okay? So that's what it does here, is that it pretty much gives you a synopsis of what they did. So again, that was Maria Cruz. Okay? You have Bob Mason, you have a bunch of other people, right? And it's only those people because they have account balances, right? Everybody else that cease to exist. So Ron Berry, Jerry, or no, I think that's why we have one. Ron Berry, we issued him an invoice. So anybody like that you didn't involve in. So Anderson Wedding, whoever else is on that list did not create an invoice for them or a statement for them. Well, it's only the people that you had activity with. So in this case, those are the people right here. Right? Now, again, they give you a preview just to make sure that you got the right people and you're not making prints for other people, okay? You could choose to print now, or you can actually choose to close the window, okay? So that's how you create customer statements, right? Give them, the customers, a list of activities and also give them a due date, okay, of how much they owe you and when it's due, okay? Now, of course, for those, since it's now, we're dealing in the month of February, we're supposed to be assuming it's March, right? You can have assessment, or you can finance assessments. Sorry. You can assess finances, okay? So what are these? So, because, right, oftentimes when you do bill your customers, right, for any reason that they either, so this is for, if they made a payment plan for you, right? If they do monthly payments to you, then yes, you can do some financial charges. So again, a great example is interest, right? You can charge interest. For those, again, if they just owe you so much money and they missed their payment, you can charge them late fees. Okay, so again, this is very useful, especially for if you do give them an account credit, and instead of having them due every single month, you can choose to have to set up some kind of finance agreement that allows them to make payments over time. However, you can charge them interest every single month, right? And that's where you can earn your money that way too. So again, if I click assess finance charges, okay? Yes. Do you wish to set up finance charges? So once again, this familiar looking window, once again, is your edit preferences and your understatements. So in this case, or you're under finance charges. So again, let's go ahead and take a look at what you have to do. Annual interest rate. So basically, what is the APR that you want to charge your customers? Okay, in this case, right, we understand this as a way for you to collect interest, right? What is the interest? Because they are owing you on an account, or they're owing you money. You have, of course, you have to sign a contractual agreement, right? Saying, well, if you decide to owe me money, right, or place your purchases on an account, you are subject to X amount of APR for your overdue balances, okay? So in this case, again, that is definitely something that you want to make sure that your customers do agree on that. And in this case, it's going to be for 10%. Okay, 10% is pretty low. Okay, there's a lot of credit card companies out there that can go all the way up to 28.9%. Believe it or not. But you know, at the end of the day, it's whatever agreement that you feel the most comfortable with. Okay, and the minimum again that you're going to charge, okay, is going to be $1. Okay, that's the minimum. Okay, for a financial. So if they don't owe you that much money and 10% of it is less than $1, well then at least you have a little blockage here saying, well, even though the 10% annual percentage rate, if I'm doing this every 3 months, then it's going to calculate 3 months, or I guess whatever 10% divided by 3 is, right? Or in this case, yes. So in this case, right, if that minimum amount does not reach $1, right, then I'm going to say, well, I'm going to round it up to $1. So that means I'm going to charge them $1 even if it doesn't meet that criteria. So even if they owe you $10, you know, 10% of $10, right, divided by the 12 months is like what, 33 cents? So at the end of the day, you're going to round it up to $1. Okay? And then of course, do you want to give them a grace period? Some people do, some people don't. In this case, I'm not going to give them a grace period. So if they miss the payment, I'm going to charge them right away. No questions asked. Okay? And then of course, let's see right here, finance charge account. In this case, it's going to be, I believe it's going to be interest income to you. Okay, so because you're charging the customers money for them not paying you, right, that's going to be considered interest income to you, or in this case, it could be finance charges income. Let's see, FIN, finance charges income. And then, of course, it says, assess this finance charges on overdue finance charges. Yes. Okay. Okay. All right. Now, the next thing is calculating the charges from...
it tells you about the laws. Can you go back to that again when you click on it? What did it say? Laws vary to the... Okay, wow. It's a warning. Okay.
Yeah. Because again, if you've ever worked for a credit card company, they actually charge you interest on top of interest on top of interest, right? It's based on a principal, right? It's not based on the principal. It's based on the current balance, which includes your interest that's already charged. So again, some laws do kind of look down upon that, but at the end of the day, a credit card company, right? They charge you interest on top of interest on top of interest, and they make you pay the interest first, and so on and so forth. And you barely pay a payment. So it's just saying, if you are not the tax accountant, then you want to be careful on these charges. But again, this is just any credit card or any financial charges. So it's just giving you a warning sign. All right, and then of course it says right here, do you want, when you calculate the charges based on the due date, or do you want to do it based on the invoice billing date? Now in this case, due date is always going to be good, because if it's due on this date and they don't pay, you charge them. Simple as that. Okay, you don't wait till you create the invoice and then charge them, because that's not fair either. All right, and then make finance charge invoices to be printed. Yes, you definitely want that to be printed on the actual form itself. Okay, and then I'm going to click OK. So once you've done that, now I'm going to get this window right here where it's saying, well, lucky you have all these people who have overdue balances. And look at here, it gives you an actual finance charge amount. So in this case, Ron Berry, he's overdue, so he's going to be charged $1.24. Where someone like Maria Cruz, branch opening, they're going to be charged because they owe us $3,365. So in this case, they're going to be charged $186 for late finance charges, okay? So once you said, yeah, all of these are acceptable, okay, then I'm going to go ahead and validate that and make sure everything looks good. You want to make sure they're marked, all of them, and I'm going to say yes, assess these finance charges, okay? Now, once you've done that and you go ahead and preview your statements, it should be on the statement where you charge them the financial charge right here. In this case, is it at nope. Financial charges, statement charges. Okay, it's not there. Is it in here? Okay, so payment. So I don't know. Sometimes I can't find it, but a lot of my students say they do find it. I just don't know where. But it should appear on there when you print it out. Okay.
So the finance charge in essence is automatically created when you create added when you create a statement.
Okay, so no, because you have to apply it. Okay, so in this case, right, because this is a statement, right? And let's say, well, all these people didn't pay for their bills yet because I'm looking forward. Now it's March 31st, right? There's a bunch of outstanding dues, right? And everything happened in February. Everything was due in February. So in this case, my assumption here is that, well, it's March already and nobody paid me. So I'm going to assess those financial charges. So you have to actually click assess financial charges for it to appear on the statement. Okay? You don't, it doesn't create it automatically. You have to assess it.
Okay. Thank you.
So it should be on there somewhere. I can't find it, but that's okay. Just letting you know, yes, if you guys actually notice the actual due amount, it should significantly change the amount that's due. So let me see, Maria Cruz, she used to owe us, $801. Now it's raised up to $3,336 or something like that. Or maybe I was talking about this person. Okay. Yeah, so it's there. All right, and I'm going to go ahead and close this window. So that's what happens especially when you have the capabilities of allowing a customer to owe you money and they agree that they want to be financed or pay you on a month-to-month basis. You can finance an interest rate. So then, the agreement is that, yeah, you can borrow money from me, but you're subject to have to pay interest on top of that. Okay? And again, I'm not going to print them out, so I'm going to go ahead and click. I'm actually going to click close. Okay. And that's how you create customer statements. Okay. Any questions? No questions? No questions, okay? So in this case, right, the next section that talks about, in the next section here, basically allows you to create multiple ways to communicate with your customers. In this case, I'm not going to go over that just because if that's something that you want to do to find some kind of method to contact your customers, whether it's via email, via mass text, or something like that, if they belong to your email address list book. Again, this is a straightforward, easy setup. just go through the book once again to if that's something that you want to learn. But again, I don't have time because it's already 11 o'clock. I do want to show you this one last section here in the book, which is talking about the sales tax, okay? Because that's definitely something that I did not talk about, and I kept saying, well, let me do it in chapter 3, and this is where it is. So right here, collecting sales tax, okay? Now, again, with the emails, you can send reminders and et cetera, et cetera, et cetera. If you read that whole section, you know what that means, and you can follow the book along too to how to create those groups so you can mass
Yeah.
email.
What page is that? I got setting up. So is that no collecting?
No. It's because we skipped around. Okay, so 104 is where we're gonna start talking about sales tax in general. Okay, so
So you skip automated payments.
yes, automated payments. The way that you can contact your customers in groups. I skipped all of that because of the time crunch that we have. Okay. So again, that's only subjected to your actual company, right? If you want to send mass emails, reminders, and a lot of companies do that when they do mass. If they're marketing, they don't want to have to waste all that money to print out flyers for you if you're not going to be using it. So they send you emails, they send you reminders, digital codes. Hey, guess what? I have an online sale, like anything like that. You could do that, and that's going to be under the mass contact section there. But in this case, I just want to talk about sales tax. Obviously not real quick, but this section is very, 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 very important, especially because it definitely deals with not only your customers, but this is how we set it up and how we collect it and how we actually pay for it. Okay, so in chapter 4, there was a small section where we pay for our sales tax. Well, and then chapter 8 is where we actually set up the sales tax. And then chapter 2, or in this case chapter 3, tells us how to collect the sales tax. Well, I'm going to go ahead and show you all of it in one sitting. Okay, so when we talk about sales tax, right, that is a huge, huge part of the sales process, right? And when we talk about sales tax, it really depends on what state you belong into, okay? I believe there are 5 states that do not charge sales tax, okay? I don't know what they are at the top of my head, but I think Florida is one of them. So if you are interested in knowing, go ahead and look that up. But again, in the state of Nevada, in the state of California, we for sure charge sales tax. Okay, doesn't matter where, even if you are charging sales tax out of state. Okay, now there's a few rules to that as well. When we talk about sales tax is based on the state that you're selling your product in, and it also involves with the local county you are also belonging to. Okay, so every county is going to give you a percentage, and every state is also going to give you a percentage, so that you get a total amount of sales tax. Now, how in the world do we set that up? Well, you can do that by clicking manage sales tax right here up in the top of the window over here. And it gives you these options, right? You can either set up your sales tax, you can pay your sales tax, and so on and so forth. So this is what we were supposed to learn in chapter 4, but I haven't even taught you how to set it up in the first place, okay? So when we talk about this, right, we also went across what a sales tax code was. Right? We did that in chapter 7, where a sales tax code allows us to determine whether a product or a service or the way that you're providing something to your customers is going to be determining whether you tax them or it's a non-taxable item. Or for this case, right, a special tax would be something that if you sell alcohol, it's a special tax. It's not the same as all other taxes, right? It's a special tax, right? Tobacco, anything like that. it's a special tax. Okay? And it could be 30, 20 to 30%, I don't know, depending on what the item is. But it's a special tax. So you do need to create all of those items so then you're able to determine whether an item is taxable or not. Okay? Now this is where so once you set this up, this is chapter 7. Okay? You set up your sales tax code here. Now, that's just that right there. The second thing we got to do is we have to create a sales tax item. Okay, what does that even mean? Well, in this case, when we talked about charging tax, it's based on the state and it's based on the county you belong to. So in this case, if I pull up my items list, right, I have a few taxes, one for Contra Costa, one for out-of-state, one for Santa Clara. Okay, why? They all have different counties which have different tax rates. Okay, and I'm gonna show you an example today, right? By going down to the bottom, right? And we're gonna create a sales tax item. Okay, now when I go here and I look at my drop-down menu, when I look at my drop-down menu, I actually have two different things. I have a sales tax item and a sales tax group. What's the difference between the two? Okay? And here's the difference. A sales tax item is something that you create based on whether it's the state or the county. Okay? Now, determining on how you pay them, right? If they pay together in one agency, then you can go ahead and create just one sales tax item. But let's say, for example, I have to pay two different agencies, right? One to the state agency and then one to the local county agency. Then I have to pay two separate agencies. So therefore, I need to create two sales tax items and then I need to group them together so I can charge them simultaneously. Yes? Okay. So this example here, let's go ahead and do an example for Clark County, since we live in Vegas, right? So in this case, I created a sales tax item, and I'm going to call this Nevada State Tax, okay? Nevada State Tax, okay? In this case, the description straightforward, right? It's sales tax in Nevada. Okay, now this is something you have to do a little research for, but what is the percentage for the sales tax for the state of Nevada? In this case, the state of Nevada is actually only going to charge you, let's see, sales tax. The state of Nevada is actually going to charge you a total of, let me see, I think it's 4.6%. Okay, 4.6%. Okay. All right. That is just the state of Nevada. 4.6%. Okay. And what agency are you going to make a payment for? It's usually going to be, in this case, you do need to have the agency of who you're actually going to make the payment to.
Department of Taxation.
In this case, it's usually the Department of Taxation, but in this example, since I don't have that person in here, I'm actually going to say okay, what was it? What did you say? Department
of Taxation.
Okay. Department of Taxation, right? Since I don't have it in there, I'm going to go ahead and create a new one. And I'm going to go ahead and quick add that. And of course, they're a vendor, right? Because you're making payments to them, all right? For this 4.6%. Okay? So then I'm going to go ahead and create that, okay? And I'm going to go ahead and click OK. So now I have Nevada State Tax. However, because I'm doing business in the state or in the county of Clark County, I do need to create another tax item for Clark County County tax. Okay? And of course, the description here is going to be sales tax for the county. So I'm just going to put county. All right. And this one is going to be 3.775%. And in this case, what is the agency? I'm just going to say, this is the State Board of Equalization. Okay. Just give an example. It doesn't have to be accurate. Example. Okay. And I click OK. So now I have two taxes that I can charge, right? A Nevada State and a Clark County. But in this case, my sales form doesn't allow me to tax twice, right? It doesn't allow me to add in two different taxes. So that's why I have to go down here and I have to create a new tax group item, okay? And this is where you need to create the items first in order for you to use the tax group item. So in this case, right, I'm going to go ahead and say this is for the Clark County, or I guess I'm going to say Las Vegas sales tax. Since Clark County is in Las Vegas, or somewhat, and we know that it's Vegas, and we know it's Nevada. So in this case, I'm going to say Las Vegas. And here, I'm going to go ahead and say sales tax in Clark County, Nevada. All right. So then what are my items going to be? Well, I've created my sales tax item, right? I have one for Nevada, okay? And I have one for Clark County, okay? And notice this, it adds it up, so then this is exactly what you're being charged in the real world, right? Right now, the tax is 8.375% in Clark County, which includes both the state and the local agency that you are making payments to. And because they're two separate agencies, right, that means you need to make two separate payments. And because this is like this, QuickBooks is going to automatically know, okay, 4%, 4.6% of it of the tax is actually going to go to the state, and then the remaining 3.775 is actually going to go to the actual county. So again, QuickBooks does a lot of work behind the scenes. But this is how you create a sales tax item. So then the next time you charge your customers, right, you have the option to choose this tax, okay? So if you remember, right, a lot of the sales forms, so if I go ahead and create a sales receipt, right, down here, but at the bottom allows you to choose what county or what place that you do. So here you go, Las Vegas. Right here it tells me in parentheses it's 8.375%. So this is where it's saying, well, if an item is taxable, it's going to be charged at 8.375%. 8.375%. Okay? And that's what you have to do. And that is the step you need to take in order to actually set up your taxes first, right? Once you've done that, this is where you need to go actually have to set up your taxes, okay? So if you go to that sales tax manager window, right, and you click right here where it says set up your sales tax, right? This takes you to the same window to your edit preferences, and this time we're in the tab for sales tax. This allows it to make it that much more easier for you to set up your sales receipts, set up your invoices, because instead of having to toggle each one saying you need to have this and have that done, right? This helps you save the time here. So then, of course, the first question is, do you charge sales tax? And we already said yes. So in this case, right, you can create the sales tax item here. Or let's say, what is your most frequent sales tax county or that you charge? In this case, right, we could do Vegas, or we could say Santa Clara, because maybe my San Jose location is my first location. Maybe Walnut Creek became second. So I have more customers in my Santa Clara area than I do have in my Walnut Creek area. Okay, so by default, every time you open up a sales form, it's going to automatically say, well, this person must be from Santa Clara. But again, if you set up saying that they're not from Santa Clara, that they're from Walnut Creek, it will automatically change this. Okay. Again, now this is saying, well, what do you do when you have a taxable item? This is where your sales tax codes come in, right? Well, in this case, if I have a taxable item, I already made a sales tax code called tax. What if it's a service item or something that's non-taxable? So in this case, since our company is providing services, which I know are non-taxable, that's exactly what I have it as. I have it as service. But let's say you're a grocery store, right? You can have the non-perishable goods versus the actual perishable goods, the food tax, right? I don't know what it's called. But when you get tax exempt for food, actual food, you can set it up this way too. Okay, this is default settings. And then here it tells you, well, how often are you going to make payments to your actual sales tax? Okay, so here they give you options: monthly, quarterly, and annually. Okay, so in this case, because you're a corporation, you have this leniency, right? If you're a sole proprietor, again, this is just so that it helps you remind you that, hey, don't forget to pay your sales tax. Okay, so in this case, boom. All right, and then I'm going to go ahead and click OK. So that's just setting up your sales tax. Okay, now how do you collect it? Well, straightforward, right? You collect it by charging your customers the tax, by creating the item and making sure, is it a taxable item or not? So right now, right, if I go ahead and take a look right now, of course, I don't have any charges for Nevada State. So if I go to my vendors, right, because I created one for the Department of Taxation, right? Department of Taxation, right here, Department of Taxation, I owe them nothing because I didn't charge any of my customers any money for a particular item, right? I didn't charge anybody for the Nevada tax. So therefore, I have nothing there. But let's check out the state of equalization. State of equalization, I owe right now $499 because all the sales that I've been doing throughout this entire class, right? A lot of these things were invoices that were already paid. So these taxes, that's how you collect the sales tax, is by basically charging your customers, writing on their invoice, and making sure that if it's a taxable item, you list it out as a taxable item. Okay? And that's pretty straightforward on how to collect it. Okay? Now, of course, how do I pay my sales tax? You're going to go through the same exact window. Everything you need to do with sales tax is going to go through this window right here, Manage Sales Tax, okay? But of course, you also have that option too if you go up to your vendors, right? But you cannot select your vendor and just pay them. You should use this because this window, because it will make it that much more easier to make sure that you make an association instead of writing a check out to them. You're not linking an association that you're trying to pay sales tax. You definitely want to go through this process where you need to identify that you want to do something with sales tax. And for this case, right, if I click on this, I can pay my sales tax. Okay? And it's going to create a separate window that isn't the same as your write a checks window. Okay? So once again, that's the second way. First way is right here on Manage Sales Tax, and boom, you have the option to pay your sales tax. So when I click on Pay My Sales Tax, this is what the window looks like. So in this case, I owe Santa Clara, and I also owe Contra Costa, right? And let's say I'm not paying it today, obviously. I'm making the payment as of, let's say, March 31st, okay? Put a random date in there. Show sales tax due through. So again, all the dates, okay? And once again, it's going to come out of your checking account. And again, do you want to set a check number? In this case, sure, okay? And I'm going to go ahead and click OK. And once you've done that, now your sales tax has been paid, right? And because they're not there to be printed right now, because that whole section was blocked off, if I go to my actual checking account, because that window was completely different, right? It shows here that I made a tax payment. It is right now pending to be printed. Okay, so that's what I mean about having descriptions or having notes in accounting. QuickBooks automatically does it for you. And it makes it even 10 times more organized because it tells you right here, you made a tax payment, you made a bill payment, you actually wrote a check, etc., etc. Okay. So that section is all about tax. Any questions?
No, I don't have any questions, Lily.
Okay. And then the last section that they say in the book is to do some sales reports, which I already went over yesterday, right? It depends really what position you are. And again, you can go to reports, and then of course you can select, I think I'm in the wrong one. Nope, reports. And then you click sales, and this is all the reports that you can do, right? Sales on an actual item that you can look up, or sales by a particular customer, right? Sales by the representative that sold the product to them, okay? Yes, you can run all those reports, okay? Again, only subjective if you are the person who's in the sales position, okay? So that is it for chapter 2. Any questions?
Nope.
All right, so let me go ahead and fast forward so I can go ahead and go over the review questions. Okay, so again, multiple choice. Please select the best answer of the following. Okay, number 1. Okay, customer statements. So basically, it's asking what does it do.
Letter A.
Letter A is correct. Provide a summary of all the account receivables and activity for a customer, yada, yada, yada. So A is the correct answer. Number 2, which of the following options is not available on the available credits window?
D.
D is correct, okay, right? Give a refund, that's what we've been doing. That was the first 2 examples that we did. Retain as an available credit. Once again, this is for in case you don't offer a refund, but you offer a store credit. That's the part that you use there. And again, C is to apply to an invoice, which we got to see for the bad debt example. So again, D, use the receivable payment. You cannot use a credit in a form of a payment. Okay. Number 3, okay, delete the original invoice. Okay, ...
C.
Is it letter C?
See?
For
'Cause you're
number
not supposed to delete
I'm
invoices,
not sure
right?
what the question is.
in this case, it's more of a statement. So in this case, it's saying, when do you delete the original invoice? So they should put, when do you delete the original invoice? Or in this case, how do you? I don't know. And
Yeah,
in this
right.
case, it's just a statement. So what should you do?
I got C.
See any of the above. Let's take a look. So would you create a credit memo using a bad debt item and then apply the credit to the past due invoice? Okay, that is an option. Or would you create a credit memo for the amount of the past due invoice and then retain it as an available credit? Okay, so in this case, this is number 3. I don't know if this is a true or false thing, but any of the above, again, if you're trying to delete the original invoice, right, in this case, you're really not deleting the original invoice, so A would be the correct answer if you're trying to undo an account receivable, where B doesn't really do much. You're not deleting or removing the original invoice, right? Because if you're just retaining it as a credit, that means the original invoice is already validated. It's already been done. You're just doing a extra credit to validate that you could save it for another transaction. So in this case, that doesn't delete the original invoice, which is I think I marked this down for the last class. Number 3 is just a question mark overall. Okay, because I don't know what it's asking. But if it is asking to delete the original invoice, right, or to remove the contents of it, A would be the correct answer. Okay, if it's telling you not to delete it, then B would be the correct answer. Okay, so again, number 3 is going to be a big, huge question mark. Right. Number 4, okay, in which of the following situations would you create a credit memo?
D.
D is correct. Okay, D says pretty much any of the above, which again, if you need to record a cancellation, again, if you return merchandise or if they request for a discount. So yes, all 3 of them are available options for creating a credit memo. Okay. Number 5, a credit memo number should be D. The same as the invoice number with a letter C. Okay, again, it's not, you don't have to do it, but it is definitely recommended. Okay, so you can make a linkage between the actual invoice itself and what you're actually returning. Okay. Number 6, okay, you need to issue a refund to a customer, okay? And the customer originally paid with a Visa card. How do you issue this refund or issue this credit?
D.
This is number 6. 6 is D. Yes, D is in David. You're going to pay the refund through the customer's credit card. Yes, always. Okay? Always. Number 7. Ooh. Okay, so your company, okay, policy is that each finance charges, okay, should be at least $5, where the best place, it should be at least $5, period. Where is the best place to set this value up in QuickBooks?
B.
D as in dog for number 7. Let's see. Enter $5 in the minimum finance charges field in the create statements window.
B as in boy.
B as in boy is correct, right? You would enter the value in at least $5 in the finance charges field in the assess finance charges window. Yes. Oh, wait, I read A. In this case, you would enter $5 in the minimum field finance charges field in the finance charges company preference window. B is correct, right? Sorry, I read A. Okay. Number 8.
So what was the answer? A?
It is B.
B. Okay.
B, because D, there is no section in the create statements window to be able to do that. You have to click assess finance charges, and then of course you would have to set that up under your preferences. All right, number 8, which report would you run to see a summary of income by product and services?
Is it D as in David?
D as in David, no. The revenues by item summary. What was that?
B.
B as in boy, the sales by customer summary report.
I got C.
No, it's not C. The customer open balance report.
Then it's A because we haven't said A.
Yes, because remember, right? Sales by item.
Okay, A.
Remember what items do. Items list out your products and your services. Okay, I ran this yesterday, right? It shows you which items did you actually sell out more. Where the sales by customer summary is going to be saying who did you sell to. Well, the open balances is going to be how much does each customer owe you. And revenues by items, there's no such thing as a revenue report. Okay, it's a sales report. Okay. Number 9. Which of the following is a way to issue a credit?
C.
Letter C is correct. You create a credit memo. So remember, customers is a credit memo. Vendors is a vendor credit. Okay, number 10. Which type of business would most likely use batch invoices?
A.
Letter A, yes, a gym club members, yes, because it has a membership due that they have to charge all their customers every single month, every single day, whatever it is, right? A gym membership, yes. Right? Number 11, a past due invoice, okay, contains items that were taxed and items that were not taxed, okay? How would you write off this invoice as a bad debt? Oh,
I got letter C.
letter C is
I got
correct.
C too.
Yes, you are going to create a credit memo with 2 bad debt items, one for a non-taxable item and one for a taxable item. In this case, I never showed you just because in this case, right, you are subject to this part too, but that is exactly what you would do, right? You would put 2 bad debt items. They're all going to be going to the same account, but one of them is for a taxable item and the other one is not for a taxable item because you don't want to charge tax on the whole entire thing. There's only a specific amount. Now, you can also do this too, where you can just write the whole entire amount and then do a separate line item for just taxes. But in this case, C is the correct answer. Number 12, which statement is true?
D.
D is the correct answer.
Is it?
D.
D as in David?
D is in David, yes. Okay, we'll go over the answers, okay? So let's go. Okay, so the answer here, which statement is true? Okay, you can create a statement for a single customer. That is true. You have the option to choose just one person, right? Let's see. Letter A. If you assess finance charges for one past due customer, okay, you have to assess them for all past due customers, okay? In this case, you can also pick and choose who you want to charge people, right? You remember that check mark box? So even if you have a relationship with this person, right? Yes, you can do some dirty business where you can be like, you know what, you're my friend, I'm not going to charge you. So in this case, you don't need to, it'd be ethical to, yes, if you charge one customer, you should charge all of them. But in this case, they give you the option to pick and choose who you want to charge and who you don't want to charge. So in this case, A is not true. Okay. B, you must preview statements before printing. No, you don't always have to, but it's generally recommended. Okay, and then letter C, finance charges are assessed automatically when you create a statement. And I just told you this answer right here. No, it is not automatic. You have to actually click on assess finance charges, and then you have to select who you want to charge, and then you apply it to the statement. So in this case, it's not automatic. And I told you guys this when we were in the middle of doing it. When Erica, you asked that question, does it automatically do it? No. You would have to, unfortunately, do it every single time, because some people may have those overdue balances and some of them might not. So you do have to click on that assess finance charges to activate and put that charge on their statement. Okay. 13, after issuing a refund check, comma, A for number 13 is correct. The credit memo is marked refunded, and the retaining credit field is 0, or remaining credit field is 0. Yes, I showed you on the invoice, right? That's what happens. All right, almost done, guys. 2 more questions. Number 14, which of the following is true?
I'm gonna say C.
C
Yeah, see.
is correct. Okay, credit memos look similar to invoices, but they perform in opposite direction, right? So what a invoice does is it increases accounts receivable. A credit memo decreases accounts receivable. Okay, so and this is a credit memo. If you guys remember in accounting, it acts as the same thing as a sales returns and allowance. But the account obviously is not going to be sales returns and allowance. It just actually takes it out from accounts receivable directly. Okay, so that's a little extra information for you. Okay, but yes, C is true. Okay, they work in opposite directions. Okay. Number 15, in which of the following situations would you create a customer group? So again, this is in regards to doing mass emails and stuff like that.
B.
B or D? B as in boy or D as in David?
I
B
go
as in
with
boy.
D.
D as in David. Okay. All right. So the answer into this question is, in fact, D as in David. So it is all of the above choices. So if you are creating a customer group, one, if you were to send a statement to customers with open invoices, right, that's a group, right? We had to filter that group out by checking those check marks. B says that you want to send a notification by email. Yes, that section I completely skipped over because that's exactly what the example does. It shows you that you can send a group a mass email. Okay, and then letter C says you want to take action to a vendor based on whether they apply for a specific criteria. I'm not quite sure. I think I'm reading that wrong. But in this case, yes. Okay, if you want to take action, yes. Okay, so again, D, all of the above is correct. Okay. So in this case, we are done with chapter 3. So homework for tonight is to read up chapter 14. I'm sorry, chapter 13, not